Okay, welcome back. So I hope you've digested. Now you're back. We are back to finishing the last question. Bulldog Company. It is a short one, but it's highly informative. Okay. So like we said, go to the question requirement first. So to get a feel of what you actually need to answer. So here, discuss why the audit of financial instruments is particularly challenging and explain the matters to be considered in planning the audit of Bulldog Company's forward exchange contracts. Okay, so I hope so far if you're doing the AA paper, forward exchange contracts is not something foreign to you, but let's recap bit. Well, foreign exchange contracts are usually those derivative instruments that are used in hedging risks, particularly maybe if it's due to exchange rate movements. So in this, let's go to the question, which is Bulldog Company is a clothing manufacturer which has recently expanded its operations overseas. To manage exposure to cash flows denominated in foreign currencies, the company has set up a treasury management function, which is responsible for entering hedge transactions such as forward exchange contracts. These transactions are likely to be material to they're likely to be material to financial statements. The audit partner is about to commence planning the audit for the year ending 31st July 2003. Okay, so here we've been asked, discuss why the audit of financial instruments is particularly challenging and explain the matters to be considered in planning the audit of Bulldog Company's forward exchange contracts. Okay, so here the example that we're talking about is discuss. Discuss is more where we say that you have to create an argument for and against a certain statement, which here the statement is why the audit of financial instruments is particularly challenging. So you can create an argument for and against this, and you have to give it, and you have to like give out an explanation for it, and yeah. So here you can be able to freely create maybe even an argument that as to why it might not also be challenging, but that is for someone who's brave enough to challenge this. But yeah, you can also still stick to just saying like why the audit of financial state instruments is particularly challenging. And as you can see here, it's 6-mark question, so it should take you around roughly like 10 minutes to answer it. So yeah, let's dive in. So okay, let's see. Okay, so here Bulldog Company is a clothing manufacturer, as we've said, and they have expanded operations overseas. So that means that they might be trading in foreign currencies. So here there's a need for them to actually reduce the risk of suffering losses due to exchange rate movements. So they have to like hedge out that risk. And yeah, so they are using forward exchange contracts. So in this situation, we have 2 questions in one here because we have the and factor. Yes, which is here, and factor. So it means discuss why it's particularly challenging and explain matters to be considered in planning the audit of Bulldog companies for exchange. So here we have to first, let's go in the first part of the question, which is why audit of financial instruments is particularly challenging. So just to spit it out there, you can say it's challenging because the auditor has to place reliance on experts, because this is actually an expert-worthy type of activity, whereby if you're dealing with foreign financial instruments, that means that the auditor has to depend on their expert as a source of evidence, because that auditor might not be particularly competent in it, so they have to rely on an expert. And with this, they have to ensure that the objectivity and competence of that expert is ironclad, and they must evaluate the adequacy of that work. So it might be very difficult to do if this is some area that the auditor is not conversant with. So if you're not conversant with a bit of this information here about forward exchange contracts, it will be hard for you even to assess what am I even assessing. So that kind of reliance on experts might be it will pose a difficulty experience for that auditor. So the other example would say that financial instruments like this case, it's difficult to understand, and that's why you say it's of specialist nature. That like there are specialists who actually study for this, like they really know what financial instruments are. But if you're an auditor and you're auditing different clients, and you're not, and maybe your client, this is maybe your first time client, then this might be a learning curve for you. So it might be complex and difficult for them to understand, and you have to explain why. Why do you think it's complex and it difficult for them to understand? Because these are things that are really specialist, and the auditor might not know a lot of associated risk exposures or the transactions that relate to it. So it might be difficult for them to actually understand it and understand even the impact of those financial instruments to financial statements. So even assessing the risk of material misstatement and detecting any errors could be also difficult for them to do. So the other part we could say is also in terms of, let's say, professional skepticism. Like we said, an auditor has to have a questioning mind in auditing certain areas of the financial statements. So in the situation, if they're faced with something that is complex and highly subjective, it might not enable the auditor to be as skeptical as he wants. So this thing, with what we can see here, it means that there might be a little, let's say, evidence, for example, to showcase maybe the financial instruments at hand here, and so maybe the auditor might not even be objective enough because of maybe if he has a knowledge gap or skill gap in terms of financial instruments. And the other part that we could talk about is that when it comes to financial instruments such as the forward exchange contracts, and besides, and please make sure that you're talking about forward exchange contracts, and that is why I say that you have to know about it, because forward exchange contracts is more of like a hedging instrument in case to reduce any form of negative effects when it comes to foreign exchange movements. So in the situation, you can talk about even this, for example, if we're talking about currencies here, we mostly will deal with estimations and also management's judgment. Maybe management has an accounting policy of using this standard exchange rate. So it means that they are using assumptions, accounting estimates in terms of like deriving to that translation of that foreign currency. So it means that they're dealing with something that is highly subjective. So in that situation, it might pose difficult for the auditor to actually um, depend on that information, because this is entirely subjective and it has been prepared by management themselves and using their own assumptions. So those are particular things that you can talk about why the audit of financial instruments might be particularly challenging. So we've talked about it being highly subjective. It's a highly subjective area, so there may be insufficient or no evidence at all, because it's up to management's judgment to actually to form any form to bring evaluation of that financial instrument. And also we talked about that the auditor, due to maybe the lack of evidence, the auditor might fail to assume any professional skepticism and as they're auditing the financial instruments. And the other part is that we see that financial instruments are of specialist nature, whereby they're actual experts that have been dealing with this, and maybe the auditor might not have certain skills to be able to do this by themselves. So they need to rely heavily on an expert, and they will have some difficulty in assessing the level of competence, because they themselves would not know what to assess if they do not actually have a foundational knowledge of that financial instrument itself. And it might pose to be complex and difficult to understand, because it's something that, as you said, it's of specialist nature, so it may be complex and difficult to understand. So let's go to part 2 of this question, which we have been told that what are the matters to be considered in planning the audit of bulldog companies for exchange rate. So let me give you a secret for this that I've seen. So let's do this. So you see here in the part for matters, as you said, part for matters here. Matters to be considered. Sorry. So here we can talk about materiality. That's the one thing that you should consider when it comes to planning, because here we're talking about planning, because in planning is whereby the auditor is trying to gain an understanding of the entity, and also like figure out an audit strategy, and then and eventually an audit plan. So matters that should be considered in planning the audit of Bulldog companies forward exchange contracts. This is more of like materiality. These are things that you should consider: materiality, the relevant accounting standard, that you should be able to see through, and also, let me do this. So the relevant accounting standard, let's say accounting standard, and then the other one would be risk of material misstatement, and finally, which is evidence. So these are things that we should consider in terms of, as you can see here, we can use the acronym, we can use the acronym for, we can use the acronym for MARE, whereby whenever we come across this question, explain matters to be considered in planning the audit of something. Those matters to consider in planning the audit of something. You should consider materiality, accounting standard, the relevant accounting standard, the risk of material misstatement, and evidence. And then we are done here. So here, what we can say is discuss why the audit, explain the matters to be considered. So in this situation, we can talk about, let's say, materiality. It's good for you. You should consider the materiality of the financial statements, which should be determined, and the significance of the risk exposure associated with them that needs to be assessed by the auditor. So you should determine materiality. That's one thing. The other thing is you should obtain an understanding of the accounting requirements here. For in this case, we're dealing with financial instruments, right? So here, the relevant accounting standards would be IFRS 9, which is financial instruments, and also IFRS 7, which is financial instruments disclosures. So here, in the planning of audit of Bulldog's financial instruments, the auditor must gain an understanding of the relevant accounting and disclosure requirements. So for instance, here, the reporting standards that should be clarified is the IFRS 9 and IFRS 7. So these standards can be complex to apply, and the auditor should develop a thorough understanding of how they relate to Bulldog's financial instruments. How do they relate to Bulldog's forward exchange contracts, to be more specific? And the other thing that we can talk about is also resources. Like for instance, here, is the auditor competent enough to be able to do the audit of those forward exchange contracts? Do they have maybe if they're not, do they have an expert who can be engaged? And it should be explained to the client that we're going to work on an expert that we know of. And those are certain things that you should be able to consider if you're planning the audit of this foreign exchange contracts. So you should also consider like the competence of the team in terms of how do they know about these foreign exchange contracts. So the other thing also you should consider is the internal controls, because when you're trying to, because we've said in the planning phase is whereby you try to get an understanding, to get an understanding of the client. So you should also consider internal controls. Like the audit planning should include obtaining an understanding of internal controls which are relevant to the financial instruments of Bulldog, and if there's any, and also consider if there's any form of like internal audit, because in order for you to be able to do those tests of control, you have to understand like, are there any like internal controls in terms of like how to monitor it and how is it controlled to assist the And this is basically to assist the auditor in determining the nature, timing, and extent of audit procedures. So, like I said before, like if you have to consider internal controls, that means that you have to like do like test of controls. But how will you be able to test? But you have to like gain an understanding of the internal controls, like from the monitoring, from the up to the point where it's being controlled. So those are things that you can be able to focus on and consider in terms of planning the audit of bulldog companies for exchange contracts. So this is what you can basically think of. But like I said, you can use this as a point of reference. You should consider materiality, the relevant accounting standards. So if you're given a question, and maybe if it's on revenue, if it's in, you know that you have to like apply IFRS 15. If it's on certain things like intangible assets, then you have to know like it's IAS 38 intangible assets. So those things are very key for you to actually consider in planning the audit of bulldog company. Sorry, planning audit of any relevant questions case that you're given. So in this situation here, the financial instruments that we're talking about is the forward exchange contracts. And please bear in mind, do not generalize your answer. Make sure it's as specific to the case study as possible to ensure that my examiner understands how you have pinpointed your actual knowledge into putting it relevant to this question in hand. So all the best and stay safe. Next time we'll review another question. Okay.